Investing in mutual funds can be a great way to grow your wealth over time, but with so many options available, it can be difficult to know where to start. In this video, we'll cover the basics of mutual fund investing, including what mutual funds are, how they work, and how to choose the right one for your investment goals. First, it's important to understand what a mutual fund is. A mutual fund is a type of investment vehicle that pools money from many investors to purchase a diversified portfolio of stocks, bonds, or other securities. This allows investors to access a wide range of investments with a single purchase, which can be a cost-effective way to diversify your portfolio. Next, it's important to consider your investment goals when choosing a mutual fund. If you're looking for growth, you may want to consider a fund that invests in stocks. If you're more focused on stability and income, you may want to consider a bond fund. It's also important to think about your risk tolerance and the time horizon for your investment. Another factor to consider when choosing a mutual fund is the fund's expenses. Mutual funds charge fees, including an annual expense ratio, to cover their operating costs. These fees can have a significant impact on your returns over time, so it's important to choose a fund with low expenses. In addition to expenses, it's also important to review the fund's performance and track record. Look for a fund with a history of consistent, positive returns, and make sure to compare the fund's performance to its benchmark index and to other similar funds. Another key factor to consider when choosing a mutual fund is the fund's asset allocation and diversification. Make sure to choose a fund that aligns with your investment goals and risk tolerance, and look for a fund that invests in a variety of assets to help reduce your overall risk. Consider the fund manager and the investment philosophy behind the fund. Look for a fund with a knowledgeable and experienced manager, and choose a fund with an investment philosophy that aligns with your goals and values. Consider the type of mutual fund. Before investing in mutual funds, it is important to understand the different types available, including equity, bond, balanced, and money market funds. Each type of mutual fund has its own investment strategy and risk level, so it is important to understand how each one works and which is best suited for your investment goals and risk tolerance. Look at the fund's track record. A mutual fund's track record can provide valuable insight into its performance over time and can help you make an informed decision about whether to invest. Look at the fund's historical returns, both in up and down markets, to see how it has performed in various economic conditions. Consider the fund's expenses. Mutual funds have fees and expenses, including management fees, operating expenses, and 12b-1 fees. It is important to understand how these expenses can impact the performance of your investment, as they can eat into your returns over time. Look for low-cost mutual funds to help keep your investment costs to a minimum. Consider the fund's diversification. Diversification is a key factor in reducing the overall risk of your investment portfolio. When investing in mutual funds, look for funds that offer a wide range of investments, including stocks, bonds, and other securities, to help ensure a diversified portfolio. Review the fund's holdings. The holdings of a mutual fund can provide important information about its investment strategy and the types of securities it invests in. Review the fund's holdings to see what types of stocks, bonds, and other securities it holds, and to determine if the holdings align with your investment goals and risk tolerance. Consider the fund's management team. The management team behind a mutual fund can have a significant impact on its performance. Look for mutual funds with a track record of success and a management team with a deep understanding of the markets and the economy. Pay attention to market conditions. Market conditions can greatly impact the performance of mutual funds. Be mindful of current economic and market conditions when choosing a mutual fund, and consider how these conditions may affect the fund's performance over time. Choose a reputable mutual fund company. The mutual fund company you choose is just as important as the mutual fund itself. Look for reputable mutual fund companies with a strong track record of performance and a commitment to transparent and ethical investing practices. Consider the fund's investment strategy. The investment strategy of a mutual fund can have a significant impact on its performance. Look for mutual funds with a clear investment strategy, such as a focus on growth or income, and consider how this strategy aligns with your investment goals and risk tolerance. Stay informed. The world of investing is constantly changing, so it is important to stay informed about market conditions, economic trends, and other factors that may impact your investments. Keep up with the latest news and research, and consult with a financial advisor if necessary, to help ensure you are making informed investment decisions. Investing in mutual funds can be a great way to grow your wealth over time, but it's important to choose the right fund for your needs. Consider your investment goals, expenses, performance, asset allocation, diversification, and the fund manager when making your decision. Please like, comment, share and subscribe.